You're staring at your bank account, seeing $100 sitting there, and thinking it's not enough to actually change anything. You've heard that you need thousands to get into the market, so that $100 just ends up getting spent on takeout or a bill you forgot about. It feels like you're locked out of the system. But what if that $100 was actually the spark? By the end of this video, you'll know exactly how to turn that small amount into a lifelong habit. Most people stay stuck because of a psychological barrier. We believe the lie that investing is for the wealthy, or that $100 is too insignificant to matter. If you put $100 into a savings account earning 0.01% interest, it's practically invisible. If you hold on to it, inflation slowly eats its purchasing power. The real problem isn't the amount of money you have right now, it's the all-or-nothing mindset. You think you need to be an expert or have a massive lump sum to start. Because you don't have those things, you do nothing. That inaction is costing you years of compound interest. Time is your biggest asset, and by waiting until you have a big amount to invest, you're throwing away the most powerful multiplier you have, the time your money spends in the market. Step 1 is choosing the right vessel. You cannot invest through a standard checking account. You need a brokerage account. Today, many platforms have dropped their minimums to zero, meaning you don't need to pay a premium just to get started. Look for platforms that offer fractional shares. This is the secret weapon for anyone with $100. A single share of a major tech company might cost hundreds, but with fractional shares, you can buy $5 worth or $50 worth. You're buying a slice of the pie rather than the whole thing. Focus on a platform that offers a clean, intuitive mobile app so you aren't overwhelmed by complex data screens. Your only goal right now is to move that money from a spending account into an investment account where it can actually grow. Step 2 is simplicity. Don't try to pick the next winning stock. You aren't a day trader and you don't have the time to track ticker symbols all day. Instead, look for low-cost index funds or ETFs, exchange-traded funds. These are baskets of stocks that track the entire market. When you buy one share of an S&P 500 ETF, you're buying a tiny piece of the 500 largest companies in the United States. You don't need to worry about one company failing because you're diversified. If Apple has a bad day, Google might have a good one. Index funds are the gold standard for beginners because they are low maintenance and historically provide solid, long-term returns. With your $100, you can purchase 1 or 2 shares of a broad market ETF and immediately become an investor in the global economy. Step 3 is automation. The biggest mistake you can make is trying to remember to invest. If you have to manually transfer money every month, you'll eventually skip a month, then 2, then stop entirely. Set up an automatic recurring transfer from your bank account to your brokerage. It could be $20 a month or $100 once. It doesn't matter. What matters is the set it and forget it aspect. By automating your contributions, you practice dollar cost averaging. This means you buy regardless of whether the market is up or down. Over the long run, this smooths out the volatility and ensures you are consistently building your position. Treat this like any other essential bill you pay. Your financial future is the most important bill you have, so make it the first one you pay when your paycheck hits. Step 4 is the mental adjustment, patience. Once your money is invested, stop checking the app every day. The stock market is volatile in the short term, but historically trends upward over long periods. If you watch the charts daily, you will be tempted to sell when the market drops, which is exactly the wrong thing to do. Selling during a dip turns a temporary loss into a permanent one. View your $100 as a seed. You don't dig up a seed every morning to see if it has grown roots, you water it and leave it alone. The compound growth happens in the quiet years where you do nothing but let your investments ride. Reinvest your dividends automatically, most apps have a toggle for this, and watch the snowball effect take hold over the next 5, 10, and 20 years. To get started today, you need a platform that makes this easy and affordable. I personally recommend using platforms like Robinhood or Webull. They are perfect for beginners because they offer zero commission trading and, more importantly, fractional shares, which we talked about earlier. They also have user-friendly interfaces that won't overwhelm you with confusing jargon. If you want to support this channel while you start your journey, you can find the links to these platforms in the description below. Signing up through those links helps me create more content like this, and usually, these platforms offer a free stock bonus for new accounts, which is a great way to jumpstart your portfolio beyond your initial $100. You now have the framework: open a brokerage account, buy fractional shares of an index fund, automate your contributions, and stay patient. That $100 is the foundation of your future wealth. If you found this breakdown helpful, watch my video on the best ways to budget your remaining income so you can increase those monthly contributions. It's on the screen now. Don't forget to hit that subscribe button if you want to keep mastering your money. See you in the next one.